Today, I'm joined by Ram, founder of Vayana, India's largest trade credit infrastructure. Vayana serves over 3,000 supply chains across more than 20 banking partnerships. The group is now building blockchain based lending tools on Hedera with the Hashgraph Association to close a financing gap that leaves 65 million small businesses without access to affordable capital every year. What does your company actually do, and what is the scale of what you have built? And thank you so much for joining today.
Hey, thanks, Ryan. Great to be here. So basically, what Vayana does is to try and provide affordable credit, trade credit, to about 70 million businesses in India. 70 million businesses, out of which about 69 billion are mom and pop shops, very small proprietorship companies that don't get access to finance. And if they do get access to credit, it's very costly. Our job is to kind of try and give them very cheap credit. And since most of them require credit to buy and sell, what we focus on is the trade credit. Now, the interesting thing is to think about this is that there are 4,000 very large companies that finally work with these 65, 69 million small mom and pop shop businesses. So if you can kind of draw a line between those 4,000 companies to these 69 million businesses, we can go to the banks and we can kind of finance and tell them that, look, I mean, these guys are actually tied up to pretty large guys, and using the large guys as a reference, can you kind of then give credit to these guys at a much cheaper rate? So the basic premise is like, what is known in English language is you're known judged by the company you keep. We are trying to tell them judge the business by the kind of people that they associate themselves with. Larger companies, better creditworthy companies, and therefore tell them, look, these guys are kosher from those guys. Why don't you kind of give credit based on that relationship rather than just on them independently? So that's the basic model that we use. What we just figured out is that it is not just enough to say credit, and it's not just enough to underwrite credit. You have to actually do a bunch of things before and after. So it's more like a pipeline. You have to kind of figure out first and foremost this small company that you're trying to finance. Does it exist? Is it not a figment of imagination? Is it actually real? Does it operate? Is it still operating? By the way, though you may be operating about 5 years back. And then figure out, are they compliant? Are they okay with all the taxes and stuff like that? Because last thing the big 4,000 companies want to do is to deal with someone who is kind of fraudulent or is not compliant or is going to come up in front page news, right? So you kind of run through all those checks, and then you kind of tell these guys, these are the companies out of the thousands of companies you deal with. There are probably someone that our bank partners would be interested in looking at. So that's what we really did. Now, interestingly, what we figured out is that banks don't like lending to really small businesses, honestly, anywhere in the world. They like to, lend at very, what they think is really large customers, less risky and all of that stuff. And we really looked at this whole problem as, how do we get money to these guys? They need the money. They need it at pretty cheap rates. They don't represent such a big risk. How do we kind of get a relationship between the large guys and the really small guys, and then allow private credit to come in? Whether it is, from the market, from retail investors, from other institutions, how do we kind of make that happen? And I think that's really the beginning of our journey, from looking at it more like a simple marketplace platform to thinking about blockchain. And that's really the journey that we embarked on about a few years back with Hashgraph and Hedera's help.
I've had the opportunity over the past handful of years to do a good amount of kind of trade finance interviews. So I'm hearing a lot of similarities from kind of the credit aspect as well. And you bring up a couple of interesting points, and then I'll kind of move us on to the next question. But a lot of these SMEs and small and medium enterprises do have relationships with the larger entities, but there's, the SMEs are still having a hard time kind of operating on a level playing field. And it's really interesting to kind of hear similarities in some of the other interviews that I've had the opportunity to do over the past couple of years. One question that always staggers me, in the trade finance realm, I think the trade finance gap is like anywhere, the numbers range, but anywhere between like $3 and $7 trillion or whatever that ends up being. When you guys look at what you guys are doing from a credit standpoint, what is the opportunity in front of you? Is there any way you can put some numbers around what becomes possible for these SMEs and where the value add is going to kind of be?
So India, the official trade gap is supposed to be about $30 billion. We think it's understated by 100%. So it's about $65 billion. The overall trade credit requirement is about $1.5 trillion. So you're talking about $65 billion of it officially, one could kind of claim as credit not being available to the market. And I think there's a recent survey that kind of put it even more into the perspective that basically a lot of these small businesses are actually excluding themselves voluntarily out of the process of getting credit because they just think that they will never get credit. Why
Huh.
go through the effort of knocking doors when nobody's going to open it for you? So people have just voluntarily excluding them. That's a very interesting phenomenon. So you not just have a business of kind of telling them you can get credit, but you also have to educate them that you don't have to really kind of put all the effort to get the credit. So it is an interesting field right now where we have 65 billion dollars of credit gaps, but we also have to kind of think about how do you make these people realize that they could get this credit if they just kind of play it along with the process. So I think that's an important one. You also raised a very important point, right? Ultimately, the way to look at this is that are you financing a small business or are you financing the relationship they have with a larger guy? And the moment you define it as you're financing the relationship, that becomes a lot more interesting for banks or for investors or private investors and everybody else, because then the relationship, if it's good, people are okay to put money into it. The moment you say, look, this is a small little enterprise, less than $100,000 of revenue, sitting in some unknown zip code, and you want to kind of give money to it, people have all kinds of questions. But the moment you say, look, this guy is dealing with this large guy, and then that relationship is actually really, in many ways, if you look at it from a computer science perspective, it's all about network graphing. You just draw network graphs and you say how strong the relationship is, and anything stronger than, let's say, 5 strands, I'm willing to kind of finance it. Anything lesser than that, then you probably want to take a different look at it. So you have to create these kind of context to before you can get, whether it be banks, whether it be private credit, whether you get retail investors to kind of come and finance it. So I think that's really the interesting part of this whole thing.
Yeah, I'm assuming, and it's just a sidebar comment, that a lot of the small and medium enterprises, they might have really interesting relationships within some of the bigger entities where maybe they're providing certain portions of infrastructure, or maybe they're along the lines of kind of a compliance process or whatever it may be that maybe people don't see unless you define what those relationships are. So yeah, I think it's super interesting. Now you guys are building, solutions that leverage blockchain to kind of go after this opportunity to bridge that gap. Talk about how that works. And I think there's a lot of real world applications of blockchain distributed ledger that maybe the retail audience of crypto doesn't see, because that's not really how adoption is going to work. Adoption is going to work through real world processes, real world businesses that are leveraging distributed ledger to actually solve real problems. What does it look like for a small business owner? Do they even see the technology at all, or do they just kind of have better options for credit or whatever it may be?
No, look, I mean, from a small business perspective, I don't think they're interested in the technology. They're interested in the outcome. They just want to get their money and as cheap as possible. I mean, they don't care if it's delivered by carrier pigeons. I mean, for them, the rest of it is all kind of an, uninteresting part. I think the real importance of blockchain is really for the investors. You really want to kind of try and get them an mechanism by which they can monitor, they can understand where the money is going to, they can understand all the movements of money that's happening, they can track the money coming back. And you need to really create a ledger system. And that's why blockchain kind of fits very well into this whole structure, just as a record keeping mechanism. That's one. The other thing, of course, is that we operate out of India, and India is not really a country that is, let alone kind of been unfriendly. It's kind of not, it's decided it won't be part of the crypto thing at all in any form and shape. So you really have to think about this as more a mechanism to store and tokenize, as opposed to kind of getting it paid in terms of crypto or stable coins or whatever it is. So the interesting thing in India is that, regulatorily speaking, we all have to kind of think of the blockchain world as more as a mechanism to tokenize rather than as a mechanism to get the payment and settlement flowing in through the digital currency basis. And I'll come back to it later, but I think that's really the first context that you have to kind of put into the whole blockchain world. Now, if it did use blockchain, let's just assume that we could do it by traditional technology. What you really lose is an opportunity to kind of portfolioize. So somebody might be interested, investors might be interested in people who are doing retail in certain zip codes, mixed with people who are doing metals or, some other kind of services in another zip code. How do you kind of put that all together and then create a mechanism by someone says, I've got $1 million to kind of invest into this, and this is the kind of portfolio I'm looking at. Be able to take bits and pieces and kind of mesh and mash together, right? And that you will really need a tokenization mechanism, and that flows out of the blockchain. So that's really the context by which we adopted. And we went back to Hedera and started working with them, is that how do you kind of create something that's regulatorily compliant, allows for solving the real problem here, which is that investors want to invest, but every investor has a certain way of looking at what he wants to invest or he or she wants to invest. And how do you kind of give them that exact mix? So on one side, you have 65 million businesses, all of them, some of them are manufacturing, some of them are in trading, some of them are in services, each generating some kind of a credit obligation. You are kind of capturing all of that. How do you kind of then take pieces of it and then say someone says $1 million, they want exactly $1 million. They don't want $995,000. So they want exactly $1 million. So how do you kind of actually arithmetically put it together and put it together in a mix that they can do that? You obviously also have to rate it. You also have to kind of make it a credit-worthy instrument. So you have a bunch of things, but essentially the whole idea of the financialization of this, rather than the digitization of this, is that how do you make it attractive for an investor to come in and say, I like this, but I don't like some pieces of it. I love some pieces of it, and I just want exactly what I love. And so it's really a blockchain tokenization is for us from an investor standpoint. And going back to the first statement I made, the small businesses don't really care where it came from. As long as it's something that will come in and not get taken back. So they're very clear about it. And second is that India is a very, very frugal country in terms of cost. You have to really think about this in terms of what is the cheapest way to kind of get money to them. And therefore, to a lot of extent, people are very, very wary about it. Intuitively, most Indians are good at arithmetic. So they will work out the cost and then figure out, is it worthwhile for them to do this or not do this? So you have to kind of make sure that you're not kind of saying, oh, I'm just giving you money and therefore you should be ready to pay me 3% or 5% or 10% or 25%. They were going to measure it against what they are going to get it from and other alternatives. So you have to always be smart about this. So that's why I think the small business side is one side of it. You finally impact them, but you really are allowing investors to come in and get attracted to financing this.
Sure. Yeah, and I think that we're at a really interesting place right now because you mentioned tokenization and kind of the thought process around tokenization as being kind of the big value add. And I think that that's what we're seeing, especially over the past 18 to 24 months. And it's nice to see because I actually haven't kind of gotten the India perspective yet, but I know that that's happening globally. I mean, for perspective, excluding stablecoins. So when you're talking about just tokenized real world assets, I always pull this stat up because it's just staggering to me. You go back to 2021 and the number's like $200 million worth of tokenized RWAs. And now in 2026, it's right around 35 billion right now.
Yes.
But you bring up the interesting point because I think that's the insinuation is entities and firms are just tokenizing for the sake of tokenizing. That's not really the point. The point is let's bring these real world assets into kind of this open environment where people can attest to what's going on with the assets, participate in them if they want to, and it becomes this flywheel effect where the internet of information essentially becomes like the internet of value, and we're just kind of crawling our way towards that. So I would love to ask, because this is always interesting to me, there's so many different blockchain ecosystems and everything else. What makes sense for an entity like Vayana as far as like the Hedera ecosystem, the relationship with the Hashgraph Association? Where does that technology kind of fit into what you guys are building?
Yeah, I think the answer is very simple. The first part is obviously old world chemistry. The Hedera guys were someone that we could kind of talk to. They understood what we were trying to do. It was just simple to kind of get across our point of view. And we were operating out of India, which is not really, I would say, in the top of list of most chains in the world. And Hedera had people who were very interested in getting into the financial inclusion side. They were really interested in India as a market. So it just made for a lot of chemistry. I would just say that's the first point of the way. The second is that Hedera had a very unique governing structure. So it had right at the beginning a lot of very large institutions part of the governing structure. And if you understand Vayana, we are talking to large corporates to bring their small guys into the fold. And it was very important for us to get a chain that large guys would be comfortable with, large investors would be interested in. And that made Hedera kind of almost a slam dunk choice. Yeah. And I think they're very, very good about kind of helping us through that process. And we have been in Davos with them. We have been in multiple conferences with them. They've helped us to kind of gain insights and an outreach into the investing world, which probably it would not have been easy for us to do. We had the demand. We had to get people interested in putting money in. So I think that's really how the relationship worked. But I would just say, we have talked to other chains. It's obviously a world where you keep talking to many people, and there are many different features of chains that you would want to kind of think about our own. This is nice, that is nice. But it all boils down to really what is human relationships. You just want to kind of work with people you're comfortable with, who stand by what they say they will do. You don't have to worry about being left to the lurch. So I think that really played very well with us with Hedera. And on the top of it, I think they have been progressing quite well. The private chain side, the bunch of things they've just kind of rolled out one after the other. I think that's really what has helped this relationship over the last, I think, 4 or 5 years now that we have been working with them. And I think it's been a great relationship. And, interestingly, they've been very stable management, which you don't find across chains, by the way.
Yeah.
You're not talking to different people every 6 months. Yeah, and you could just, the frustration of people like us who are trying to work with and then get the technological assistance and the, various other commitments if you have to deal with different people. So I think Hedera just checked a lot of boxes, and I think it's been a great partner to have for us.
We've seen blockchain and distributed ledger kind of promise to expand this financial access. I mean, that's always been the promise. I go back to 2009 and kind of Bitcoin and how things have evolved way beyond that in 2026. And it seems like we are kind of at this precipice of everybody understands. Like all the enterprise and institutions seem to at least have a ground level knowledge of like where the value add is and kind of where this technology goes given an amount of time. So I guess the question that I have is, where are you guys at right now as far as like developing out? Because I keep hearing you've said a couple of similar things a few times, and I think that I've heard building trust a few times. Where are you guys at in building that trust, whether that be with clientele or whether that be just maybe more broadly within your organization, things like that?
Look, I mean, I think in India, the important thing is that you build trust with institutions first.
Mm.
I mean, as I said, your customers really at the end of it, the small mom and pop shops are not really the ones that are worried about, what chain are you using or, what technology you're using. They're really looking at it from an outcome perspective because they're all kind of surviving and they want to kind of just make sure that if you promise them something on the 30th of the month, you're going to deliver on the 30th of the month. All right. I mean, so you really are looking at institutions who you want to get along the right. You want them to trust you. And that's really the key thing in India. And because regulatorily, we, and I think we are very, very good at kind of leapfrogging, but we also can be very painfully slow in terms of some of the stuff. So because blockchain got, I think, associated with crypto, and the Indian government and the central bank and everybody else were very clear right from beginning. And, you have to admire them for their consistency that this is not something that we want anywhere touching our shores. A lot of blockchain got stuck in a phrase where it just became another database.
Mm-hmm.
And I think it's only tokenization over the last 2 years that suddenly people have realized, it's actually helping you to kind of, I just want to take you back to the example of the infamous example of 2008. We had portfolioization. We had, a lot of mortgages chip-chopped into various elements to it, but nobody could trace it back.
Yeah.
What blockchain did was to be able to take this final thing that you built, abstract it out of your small little pieces, but be able to trace it back all the way down. And that's what really kind of makes this scalable and, kind of trustable. And I think the government and the regulators and everybody else have now kind of clarified their position on it. They're saying that, yes, blockchain is good, tokenization is good. So tokenization is good, and therefore blockchain is good. And as long as you don't bring crypto into it, we are fine. And now, interestingly, now you have, while stablecoin still is a little controversial in this part of the world, primarily because USD is the primary stablecoin out there. But the interesting thing is deemed deposits have become very, very interesting. And that's because that works very well with the current banking and financial system. So everybody is okay with deemed deposits. And there is actually right now sandboxes going on run by the regulator for deemed deposits, for tokenization, tokenization of deposits, tokenization of liabilities, of assets. So I think that's kind of set our path. We probably, I mean, honestly speaking, we probably are 2 years, we were 2 years early to the market, but what it has helped us to set us up is that we're already ready with the technology. We're ready with the ability to kind of leverage what the market is now going to allow us to actually do. More importantly, we have this interesting structure in India called Gift City, which is like an offshore banking center. We have kind of insured an offshore banking center. So we try to create our own Singapore, Dubai equivalent of a center within India, which will kind of run by international laws, which will be forward in terms of innovation. And their actual mandate is to innovate. And therefore, it allows us a great big sandbox. In fact, it's not even a sandbox. You can really run large systems out of it, where you can do all of this stuff without having to worry about that and then bring it to the mainland. So I think we are in 2026, I think at the right at the cusp of kind of actually following through and making this technology scalable as opposed to doing a bunch of small experiments. And we have been ahead of this game, and therefore it allowed us a lot of, I think, credibility in the market that we were already ready with it. We were doing it overseas because we were not allowed to do it in India. And therefore, then we brought it back to India. Now all the institutions are very interested in us. So I think that's really where we are. I think you're going to see a huge spurt in tokenization. India, by the way, leads in electronic payments of any form from any other country 3 times over, right? I mean, we have a massive digitization of payments. We have massive digitization of credit. Everything is available through APIs. So it's actually incredibly first world in terms of how the financing and the payment system works in India. On the top of it, now you have the tokenization bit. And suddenly it opens up an whole new vista in terms of the investing side to be able to say that I can create portfolios, bouquets of whatever stuff I'm interested in. So I think that's really where we are. I would just say if you did this interview next year, you would be incredibly surprised by the speed at which we kind of added to that 35 billion, that you talked about in real world asset tokenization. Interestingly, it'll be RWA and RWL. In the liability side tokenization. So it's not just the asset side tokenization. So you're going to have two of these kind of in India. We are very, very good at embracing technology. And as long as we don't let the crypto part in it, because that's deeply suspicious, people don't like it. I mean, the regulators don't like it. So you kind of take that out of the equation and you live with the real world money done through, deemed deposit tokens or whatever it is that you want to call it. I think it'll work fantastically well. And, a lot of the times, I think the question really is also about, Hedera, right? I mean, Hedera actually kind of worked with us on this whole map, and we could see this happening over the last 2 years. And we kind of, I think used some of their resources to kind of understand this a little better as to how it would move. And, honestly speaking, the crypto-defined blockchain world, tokenized or non-tokenized, has really been struggling. I think the real world assets really came into US. And now with your Genius and, Clarity, whenever it gets signed off, I think you suddenly have an explosion there. And US kind of then becomes a market for everybody to benchmark. And India will kind of build its own, but it'll kind of take some of those aspects and bring it here. So I think I would really bet on this becoming a huge multi-billion-dollar space in the next 12 to 18 months in terms of where it can move.
I think you bring up a really interesting point because I know I'm one of probably very few individuals that I will dig into kind of documents and banking. And I saw this maybe about 18 months to 24 months ago. There was kind of this shift, and not to get into stable coins, but tokenized deposits. I started seeing some of the banking entities really start going down the route. And for those that aren't or watching this that may not be aware of what tokenized deposits are and how they're different from stable coins, tokenized deposits are essentially it's already the regulated money that is already within the system. It's just tokenized. So it allows you to do, all sorts of different stuff at an already regulated level. But so, yeah, super interesting. You bring up RWA and RWL. I think it's the one thing that I think is the most kind of interesting aspect of all of this technology is, and you've said it a few times here, I think it democratizes access into more choices and obviously compliantly with regulatory compliance, but there's going to be more choices for consumers. There's going to be more choices for clients. There's going to be more choices for end users. And all of those choices come down to what makes the most sense and how individuals or entities want to participate. And it's all going to add value. You bring up the perfect example is I agree with you. I think we're heading towards a future where I can't think of a better word besides smorgasbord. Maybe a smorgasbord of different asset classes or, like for me personally, because I do come from kind of more of a traditional blockchain like / crypto realm, I'm interested in the traditional regulated industry coming onto blockchain and having some very, I would say, more sustainable things to participate in. Crypto has not been the most sustainable. You see these resets every 3 or 4 years. It's because stuff just isn't sustainable. So I'm looking forward to the real world coming on chain because I think that is what's been drastically needed. So what you talk about,
I think the interesting thing is we set ourselves up as an alternative.
Mm-hmm.
And I think now we are in the replacement side. And replacement is an easier word to think about than an alternative. People get threatened by alternatives. People don't get threatened by replacements because they just think it's one being replaced by another. So I just think that, we are, I think we also ran after a bunch of very idealistic thought processes, which is very good in its own way. But, I think we are now come back to the realization that we need to get these things to work. I think the funny thing really is that everything matters down to simple things, case law. When you have a dispute, which is the court that you can go to and get it resolved? And will the court recognize your, whatever you have to say? And, that becomes, I think, the central point anywhere in the world. It's you can do anything you want, but, it has to be adjudicated. It has to be kind of decided in a court of law. And I think that's really the reason why I think regulated deposits, deemed tokenization, all of that becomes very interesting because they're working within the real world abstraction. But at the same time, one of the interesting points I do want to make is that we're always talking about small businesses getting access or retail, small poor people getting access to money. Interestingly, now you have a case where you don't have to have too much money to even invest and make out money out of lending to these guys, right? I mean, so that is the big thing. The real big thing the crypto world showed us and the DeFi world showed us is that you really can come into this market and be part of things that you probably were never given access to. And so now you can kind of open it up. A dollar can be invested into a dollar worth of loan, right? I mean, previously you had to be some mega number there. So I think we're just going to see a lot of interesting, people, coming into the market. We're going to see a lot of intermediaries coming to the market. A lot of the terms that we used in the DeFi crypto world, the oracles, the custody, a bunch of things suddenly becoming relevant. They'll probably get new names. Because people want to kind of make it more and more traditional, but you will want to kind of get a new bunch of players. So I'm very excited. I mean, this has been kind of chasing the end of the rainbow sometimes, especially from India. Maybe not in other parts of the world. And it's now nice to see it's not the end of the rainbow. It's actually something much more real. You can see the opportunity there, and you can see the regulations moving in your way. And I think, the interesting thing is we're ready. So I think that's really the good point.
Yeah, you mentioned, and I've seen this too, that it is kind of like Back to the Future. You know, there's some use cases that I remember seeing in 2017, 2018. Micropayments really kind of rings a bell. And now it seemed like that technology was like too early for 2018, 2019. And now I'm seeing a lot now in 2025 and 6 again about micropayments again. But you bring up, I think, kind of the best point out of all of this, which is you don't have to be the 1% of 1%. There are people I know right now that literally participate at the infrastructure level of blockchain and distributed ledger with $5 or $10 they started, where it used to be you need to have thousands or millions of dollars in your account. It's not going to matter in the future. I totally agree with your ethos there. And I know we'll close out here. We talked about what this means for business owners to be able to access financing and what this potentially opens up in the future. But walk us out, like you kind of given your forward looking statements a little bit, but any milestones that you guys have had that we might have missed during this? Any kind of signals that you feel like might hit to kind of let you know that we are kind of at that acceleration point where infrastructure is kind of moving into kind of the operational phase, or just any forward-looking statements?
Look, I mean, at the end of the day, as we sit now in June of 2026, we have three very large agencies in the world, multilateral as well as normal financial institutions, ready to create a fund of about close to $350 million to invest into tokenized small business asset, loans. And so now it's moved beyond, just talking about a few 50 million, or a 10 million or $5 million kind of funds to a $350 million fund. And the interesting thing for me is that this has come because they had a demand and they figured out we could fulfill the demand. This didn't come us out going out and pitching and evangelizing something new. This didn't come out of us kind of creating the dream. They just wanted to get to someone who could kind of create the infrastructure and the ability to kind of plunk in that kind of money. So I think a lot of times the romance is not really the impact that you do, I mean, though that's the impact is what really you carry back home. The romance is that when suddenly the world kind of opens up its eyes and says, this is what we want. And we are there saying, okay, we have it. And that's the interesting part to me, that the guys with big bucks are kind of now saying, we want this. And we just are in that happy phase of saying we have it. So, probably in about a quarter's time, you will hear some releases from our side about opening up this kind of a large fund that will allow for institutions, small businesses to kind of get access to really cheaper credit. And interestingly, cheaper credit from a US dollar perspective and an Indian rupee perspective, because we also have to remember that a lot of the money coming in is US dollars in one form or the other. And the deployment is in Indian rupees. And there is a huge foreign exchange risk going on right now. So that's going to be the interesting one, how to kind of manage that. But I think you're going to see some pretty large sums coming in. We are living in very interesting times. So therefore, it's always dangerous to kind of make forward-looking statements because you don't really know what's going to happen next day. But I would just say that, the money always moves to, I think, what it wants to kind of move into. I mean, there's just an irresistible reaction of money. And I think that's what we're seeing. June, I'm very, very happy of 26. If you'd asked me 2 years back, I'd have been saying, I don't know what's really going to happen to this world because I didn't see action from the regulators. But I think now 2 years down the road, I think we are now seeing it. And I just think it's going to, if we can set up a $350 million fund, somebody's going to set up $1 billion fund. And then somebody's going to set up a, $15 million. I mean, we finally have $1 trillion, valuation of a company coming right out of the stock market. So, all kinds of interesting things at scale are happening right now. And I wouldn't be surprised if in 2 years' time, we also have $1 billion fund out there just because there's enough demand. As I said, if $65 billion of unmet credit demand, you could create $1 billion fund. It's still a very small percentage of 65 billion.
This is a interesting sidebar before we close out, because we didn't get too deep into the weeds with it, but you've brought it up. I'm so interested to watch what downstream effects blockchain and distributed ledger have on society, on culture, on business in general. Because here's a good example. I did an interview, and mainly because I never thought of this use case. So whenever I did the interview, I'm like, that's a really interesting use case. So I think when we talk about tokenization all the time, we talk about actually tokenizing the asset itself, bringing it on chain, whatever. But the interview and the use case here was they were tokenizing the financing of critical mineral and precious metals mining. So they were tokenizing the actual financing to actually go and mine. And that's very similar to when I think about this interview and we're talking about access to credit. Credit drives the majority of operations for all of manufacturing from an SME standpoint. I mean, all of these manufacturing firms run on letters of credit and things like that to get started. And I just think that it's in kind of its end state, what we witness here, maybe over the next couple of decades or whatever it is. It's just going to be really interesting to watch how businesses operate, because I think that it's going to open up businesses that are doing a really good job at what they do, that are kind of in these niche little areas. I feel like might grow a lot more. And I think you brought it up earlier. It's because you can attest to all of that data back to the origin for that trust, for that entity, for that institution. So, Ram, this has been an awesome interview for me. Go ahead. Sorry, I didn't.
No, sorry, just one last point in that. It's interesting. So in India is one of the largest, everybody holds gold here very dearly in India. Everybody has a family history of collecting gold and investing in gold, and that's considered your family income. So a lot of the small mom and shop businesses, the only collateral they have is gold. So just think about this. If you can collateralize gold on a blockchain, you can tokenize it, and then you allow it to be used as security or collateral for the loan that you're getting in. You automatically are taking two asset classes, the loan itself and the gold itself, tying it up together. And at the same time, allowing, like, you add in the DeFi world, staking of your Bitcoins, or staking of your various crypto assets. You really can think of staking of the gold coins to kind of try and get that. And you can start staking your gold coins for somebody else to get collateral. The fundamental thing, I think we are all kind of lost in this old crypto world, if I'm sorry to say that, is that we really lost sight of the immense possibilities of the underlying technology. And we kind of got into the financial part of the world, because that's where it started, I guess, with the attempt to kind of create currency that was kind of not abused by governments and central banks. But if you take away the fundamental technology that was built, you really have an ability to kind of imagine a lot of the second and third order kind of processes coming in and becoming so much more efficient. You have a small little earring of gold that's probably about $1,000, and you can stake it out for a $500 loan, and all of that can be kept on the ledger and can be assessed and assayed. And so you just start creating fantastic possibilities. And I think that's really where I get excited about in terms of what it can do for us.
Well, Ram, I want to make sure that I pull up the website here so that people can go and learn more about all the great work that you guys are doing at Vayana. You guys can go to Vayana.com. On their X, it's at Vayana Official. Huge shout out to the Hashgraph Association for helping to make these podcasts possible at @_Hashgraph. You can learn more about some of the work that these guys have done on Google as well. I had Genfinity's X pulled up. Let me pull it up here. Give us a follow at Genfinity. And you can go to genfinity.io to read all about all the articles that we publish and everything else. And this will probably have an article as well. And I have to give the shout out. We're on Google News now. So anytime we push an article, we're at the very top of Google News. That took us years of battling against Google's AI. But Ram, thank you so much for joining today. Don't be a stranger. Looking forward to having you on again in the future. Let's do this again in a year so we can kind of revisit where we're at.